Welcome back to the Eric Krown crypto channel, and today a bit of a different video as I wanted to provide some color onto how I go about creating strategies and then backtesting them, and then if I like the results, then employing them, of course, if only you like the results. So we're going to go over a hypothetical, very basic, very unoptimized strategy for the purposes of this video. The motivation for this video was to provide some insight for the people who have been using the Bitget link in the description below. I should let you know that that is an affiliate link, so full disclosure there. And of course, you don't need to use it if you don't want. You can just type it at the top of your browser. However, it does come with a few benefits like reduced fees and also legal to use for USA citizens, Canadians, and Australia at the time of this recording. But this is for my moral conscience so that I can feel like I've given you the tools that then you can use to backtest your own theories, own ideas, and then find out if it actually is going to work or not. So first and foremost, we're going to start off over here, and you can 100% completely copy this. Again, this is unoptimized. I don't even know if this strategy is going to work. I assume it's probably going to be okay, but it certainly is going to be unoptimized. And I imagine that an active thinker is probably going to look at this and be able to figure out a few sort of twists and turns here or there to make their own and probably be, decent enough with it. Of course, this is not financial advice. I'll say it again. This is not fucking financial advice. This is just a demonstration for educational and entertainment purposes only. So let's get into it right here. This is what I refer to as a trade strategy and checklist. I put out videos on this channel on this topic before, but I really want to hammer it in on this particular one. This is where we actually deliberate on a potential strategy. And in this case, I'll just run you through it. Again, you can copy all of this. You will very likely have at minimum all of these, at least if you're serious about this. And if you're a little more serious, you're probably gonna have a lot more points of criteria to essentially test out a strategy. The more information, the better, but this will be a working example to begin with. So we're gonna first start off with what time frame. What time frame are we trading? We can't trade all of them, just one would be good. In this case, I'm gonna choose a 4-hour time frame because it's rather simple. What is gonna be used for the main source of edge? Now, this is where you can employ basically whatever you want, assuming it has some sort of statistical relevancy, which is what you will test later. But basically, this could be based off of technical analysis. It could be based off of quantitative analysis. It could be based off of fundamental analysis. Could be based off of mood analysis. Whatever might have you can choose. This is where you get to test out your theories, essentially. Anyways, what defines a risk management parameter? So for this, I always have at least 2 ideas. One of them I refer to as ideal, typically based off of closures, and the second one is going to be what I refer to as an emergency risk management procedure, which is typically based off of wicks. Now, the ideal procedure typically incurs less loss, but at the cost of, during particularly volatile and violent price action, sometimes, price action might blow through that area, and it's not necessarily as ideal as you might have once thought it was, and perhaps even career ending. So that's why I have the emergency condition, which typically has a lot more risk usually than the ideal one, but needs to be there to save an account in case of a 10 sigma event essentially happens. So in this case, what I'm going to do is I will take off this position based off of the 4-hour trend. If we get a close above or below the entry wick high or low, whichever one's relevant for it, obviously. The emergency will be a wick above or below the prior range high or low. So that's going to be much further away, very, very likely, or it should be much further away, and thus will incur a lot more risk if it does happen. But obviously, if price action is getting there, probably don't want the position anyways, just theoretically again. How will positions be entered? So entry at market upon confirmation of a local high or low. How will we define what is a local high or low? Well, this is where you have to have a little bit of know-how, I suppose, but for the purpose of this demonstration, again, not optimized, this is all theoretical. I'm going to do it off of a confirmation of a local high or low upon validation above the range high or low. So it's going to be based off of ranges. That's how I decide whether it's a local high or local low, or just another range play, basically. And then I'll just mark it in full position. Okay, so just to make the calculations easy here. Again, you can do this many different ways. How positions be exited? So basically profit taking. In this case, I postulated a couple different things here. I think we're just going to focus on the first one though, a confirmation of a local high or low on the other side. So in this case, if we entered on a local high, meaning that we shorted the local high, or let's actually make this on the other side because it's going to be a little more easy. So let's say that we entered on a local low, we're playing an uptrend, and that means that we're going to exit on the confirmation of a local high on the other side. Obviously not on the confirmation of a local low. That wouldn't make any sense, especially for profit taking. I just put up this idea here as well, but we're only going to test one at a time. And then a trade invalidation or caution. So if this condition is present, then the trade is either not to be taken, or perhaps you're cautious with it, meaning that you employ a different technique with taking profit more aggressively. Perhaps you don't put as much on the position if this is present. You don't put as much risk on it, meaning less size. Something that that if present tells you either you don't take the trade at all, or some other condition is lessened, because likely your probabilities are going to be lower in it, or your hit rate is going to be lower. In this case, if let's say the daily trend is opposite of the 4 hour, maybe I don't take that trade, or maybe I have like a lower amount of size that I put on that trade. Okay, beautiful. So once we've gotten through that, then we can come over here. This is on the Krown training application. You can find that in the link in the description below. It is also free. It should be like right next to the Bitget link, which should be probably the first one in this video. And in this case, you can use this. You can use Excel. Both of them are free, obviously. This one, already has it all done for you. As I drop my thing over here. Apologies on that. And this is how we're going to actually document the results in our backtesting procedure. So in this case, again, this is free. You don't have to use Excel if you don't want to, or you can use Excel. It doesn't matter. But we just want to be able to record the data. In this case, for this particular trade journal, we will be having a lot more functionality coming with it in the future. But at minimum, it needs to be at least this. So there we go. All right, so let's put this strategy to the test. Let's go into our charts over here, and let's do like 5 to 10 iterations and see how it does, and then analyze it. So in this case, what I'm going to do here is I'm going to start with this area over here. And remember, I'm defining local lows and local highs within the concept of a trend as basically breaking a range high or low that kind of correlates to it. So in this case right here, we have range highs, we have range lows. In this case, obviously this is going to be a local high when you trade and close below the range lows, which happens right here upon closure. So that's 42,534.5. And then, well, I would have entered short theoretically. So let's actually put that in the journal. Again, 42,534.5. Okay. What was it again? 42,534. 42,534. Okay. 42,534.5 is going to be a short, obviously. And then where are we going to exit? Well, we exit, or at least in this strategy, I would be exiting upon confirmation of a local low. So again, if we trade this one all the way down, when we get into this area right here, where's your range highs? Right here, obviously. Where's your range lows? That would be right here, obviously. I mean, you can even pull it back and know that's from here. Same thing though. And when do we confirm this as a local low? Again, not fucking optimized, but it would actually be on this closure right here, given the criteria that I put out on that particular one, which would be 41,206.5. So we'll put that in, 41,206.5. Beautiful. I'm not going to put in the time for this one because I want to make this a little bit on the faster side, but even with this severely unoptimized strategy, not bad, not bad for a little bit of a profit right there. So we'll put that one in. We're one of one where we got a 100% hit rate. Amazing. It's never been better. Okay, beautiful. So let's get rid of everything yet again, and let's go back into it. So are we going to trade the upside move over here? You can trade the upside move, but seeing as the trend in this case is, well, I mean, you could trade the upside move. We could just trade the upside move here. Why not? Okay, so we got the range highs right here, right? Technically speaking, this would be the entry, although now actually we're not going to do it for the sake of just uncomplicating things. But basically, because we already exited the prior trade right here. So let's say we look at the next range. Okay, well, in this case, we get a high right here. It kind of comes in line with this last little structure right here. So this is the range high, range low, closes below the range low. That is your 4790.5 tick. 4790 spot 5 is going to be another short actually. And we're going to go back in over here. And of course, where do we find our exit? On confirmation of a local low. And where do we confirm a local low in this one? We could actually use the same range lows as before. I mean, it's the same damn thing, really. But in this case, Bitcoin comes to this area right here. So once it closes above this region, then I confirm this as a local low. And in this case, it happens way over here. Again, very much unoptimized. 40,511 is going to be the number. So 40,511. And again, we had a short right there. Again, I'm not putting the time. Actually did work out, although again, definitely not perfect. Definitely gave up a lot of potential profits on that one, and then we'll go onwards from there. Bitcoin rallies up, and let's let's find our next potential entry. Do we get an entry right here? Okay, so Bitcoin puts in range highs. Okay, we get range lows. Does Bitcoin close below the range lows? No. So we do not have a local high just yet. I'm waiting for the next local high to take a trade. I'm not going to long like a higher low in this case, just for the demonstrations purposes. I'm only taking shorts, I guess, because that's we're going to trade against a trend. Just fuck it. So in this case, what happens over here? Well, Bitcoin rallies up. Okay, so we get our next range highs right here, obviously. Get a next range lows right here. Could we take this trade? Yes, let's get a loss on the board for the love of God. I don't want to make this sound perfect, right? It's a little bit too easy right now. So in this case, Bitcoin puts in a little bit of a local high, let's say, and that gets confirmed on this closure right here, 41,355. It's going to be the number. Okay, we're going to do short, 41,355. Okay, beautiful. And then what happens after that? Bitcoin comes down, puts in a bit of a local low right here. Actually, in this case, does it put in a local low, or could you say that it puts in a local low right here? I mean, really, it's still another range play if you want to be super exact with it. But I do want to make this, I do want to make this more relatable. So, actually, let's treat this as a range low, because that is what it is, to be fair. But this one actually hits our risk management, right? Because this is your high, so that's your wick high right there. Where does risk management get initiated? Well, on a closure above the wick high or a trade above the prior range high. The prior range high is like way over here if you're referencing the one that's higher than the one that we're currently at, obviously. And so that happens on this closure, 42,970.5. Okay, 42,970 spot 5, and it's a loss. No, it's never gonna win it. It's never gonna win again. We got a 2 out of 3 of these have worked. That's great. That's amazing. In this case, obviously, again, we're trading against the trend here, but this one's just a continuation move to the upside. There's no real local highs or local lows. This would all be kind of one of the same, at least in the way that I look at things. Same thing over here. There's no obvious stop and reverse points. Okay, cool. So then we get into this next iteration over here. Again, we're only taking shorts because we're mean bad bears. And again, you can obviously trade the opposite side. I just want to make this more difficult in this case. Range highs, range lows, confirmation of a local high on this closure right here, 46,450. Okay, 46,450. So we're going in short. And where do we exit? Well, we exit on a confirmation of a local low. In this case, comes all the way down. Where's your range highs? Range highs right here. Where's your range lows? Range lows right here. Closes like right here, basically nullifying the trade. 46,525.5. 46,525 spot 5. This one's going to be a loss as well. Again, not fucking optimized. Anyways, Bitcoin comes into a nice sideways consolidation right here, confirms another local high. That gets confirmed on the closure below that range low in this little segment right here, obviously. That's going to be your 45,498 tick. 45,498. We're going in short yet again. And this one has a nice big move to the downside. Do we confirm a local low here is the real question. Well, you get a range high, you get a range low. No, we don't trade above the range highs. So it's a trend trade all the way down until we get to here, where it actually does close above this region. And that would have been your next range low. So I would have actually closed it right here, 43,222. 43. And now you're starting to get an idea. Like the winning trades should severely outweigh the losing trades in terms of P&L. So when we expect to lose, but we expect to lose not as much than our gains. And the hit rate is actually, on our side as well. So in this case, all right, so it closes above the range highs right there. In this case, it is a fake out, obviously. We can even do the same thing. And because we have these range lows right here, look at this area. And where do we confirm below the range lows? That'd be right here, 41,037. If you understand why I absolutely hate breakout trading, this would be why. I think it's mostly garbage, but again, it can even work. Anyways, Bitcoin trades down. Okay, beautiful. We create another range, right? We find our range highs, we find our range lows. We close above our range highs right here, local low confirmed, and that is 41,160. 41,60, boom. Beautiful, and another win, that's good. And then also I do want to state, let me just get rid of everything right here. I do want to state that you can also use the replay function to test this out. It's right here. It's actually gonna be a better way of doing it because you'll get to see things in real time. The reason why I'm not doing it on this one is because I want to like save time. Obviously, when you're doing this for your own purposes, testing out your own strategies, you probably don't want to be saving time if it means that things might not be as accurate. Anyways, same thing over here, right? We get our local low, we get another range, in this case, range high. Range high, range low, okay, and we get another entry right here. That's going to be 39,961.5, 39,961 spot 5. Okay, we're going in short yet again, and this one again, it trades above the range highs, but it does not close below, above the range highs. So this is not confirmed as a local low right here, and Bitcoin actually trades back down, creating thus another iteration of this. In this case, we have these range lows versus, I guess it's going to be like the range highs in this case, and that's going to be our new range lows. Close back above right here. This one's going to be a loss, 46.85. 46.85. Okay. All right, and let's move onwards and forwards from there. Bitcoin confirms local low right there, trades up, 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 up. Where do we get our next local high? Is it right here? No. Is it right here? Yes. So there's your range highs actually coming in back from here, to be fair. And it gets confirmed below these range lows. Okay, so that happens right here, obviously. That's going to be 44.53. 44.53. 44.53. Okay, beautiful. We're going in short yet again. And where do we get out? We get out upon confirmation of the next local low. In this case, we do have another range going on right here, but it does not close above the range highs, thus confirm this as a local low. It's just a continuation move. So take the bottom end of that. When Bitcoin closes back above it, well, that would be essentially the exit. So 42.25 is going to be on this closure right here again. Not fucking optimized. 42.25. Okay. 40. Boom, and there we go. We got 8 so far. Let's go for 10 just to see. And from there, let me get rid of everything yet again. We're actually getting to our current move right here. So what happens after that? Bitcoin rallies back up. There's your, basically your prior range highs right here from this range become your range lows for this local high. And then even like the same thing right on over here. This confirms another local high upon the confirmation. This one's going to be bad, obviously. 38.555. Let's give me the number. 38.555. Okay, short. And let's see. And this one trades all the way down. And then where do we confirm a local low? Well, we've got our prior range lows right there. Bitcoin closes above right here. This one's going to be a loss. 39.055 is going to be the closure. 39.055. Alrighty. Okay, so we're losing again. Uh-oh, no, win rate's going down. It's never going to work. Obviously, we're not going to have, we have another trade right here, probably going to end up being a win, but we don't have the resolution of it, so we can't do that. Let's just scroll back and, well, this is going to be quite obvious right here, but let's just take an obvious one. Why not? Why not, man? Why not? Well, that one's going to be too good. Fuck it. All right, well, whatever. Whatever. Let's actually take the reversal over here. This is going to be a pretty interesting one. So Bitcoin comes off of the all-time highs at 69, puts in a bit of a range. Okay, range highs, range lows. Bitcoin closes at the range highs, but not above. So it is not a continuation. We close below the range lows right here, thus confirming this as a continuation move, and this is a local high, and that would be confirmed. And I'm taking the worst point of this, by the way, 68.89. Okay. 68.89. Okay, we are going in short. All right, beautiful. And where does Bitcoin confirm the next local low? Not right here, obviously, or what I mean is not right here, because there's your range highs, there's your range lows. It does not close above the range highs. It's continuation. In this case, we get another range. In this case, here's your lows, and then your prior range lows become your range highs right here. Close above the range highs, obviously, on this tick, 59.471. 59.471. Boom. And nice. Okay, we got 10. Not bad. Okay, so in this case, again, very unoptimized strategy, obviously. Imagine that anyone who has a little bit of know-how can make even like a one small tweak to this and it'd actually be, you know, much better than this. But in this case, we had 10 trades. The win rate for these was 6 out of 10, so 60% win rate. The average win was 946. The average loss was 728.5. And then we have the totals over here. So if we were to take both longs and shorts, and to be fair, if we took longs and shorts, the win rate would have been like a lot higher. Most likely, then yes, you know, it gives us the total over here. So then you can analyze these statistics, and well, you know, is that acceptable or not is a decision for you to make, obviously. Again, this is all hypothetical. I'm not saying that this is a strategy that you should use, just a sort of a template that you can go off of to create your own strategies with this, of course. And I suggest really changing that around as well. But you can see, even with a very basic, super fucking basic strategy, which almost no one fucking talks about, it's just trend trading, very unoptimized as well, can actually work, yes. So do be aware of that a lot of the time, I think people really go a lot heavier into what they actually need to do. Personally speaking, I never use more than 3 potential sources of edge to create a strategy, so I'm not having like fucking 10 different indicators on my charts, for example. I have no more than 3 on any working strategy, and even less is better in my experience as well. I like to have something for trend, volatility, momentum, because that is my particular strategies or what I like to trade based off of. Doesn't mean it's right for you or wrong for you, just sharing the way that I do things. And then of course, I also wanted to provide a point of reference here, because while I do these videos on YouTube for general market analysis of like, you know, where's Bitcoin a little bit more likely to go, you know, in these sort of timeframes and whatnot, according to statistical data, you know, understand that that's not a trade plan. And a trade plan is a lot more deliberate. Again, it has that minimum in entry, exit, and risk management, a few other things here as well. And then we want to back test it. That's where you can actually have some sort of an edge within this market. And of course, I should also remind you, we got the old Bitget link in the description below. It gives you a deposit bonus of like $3,000, $4,000. Strongly suggest do not fucking use it until you've backtested a working strategy. And then at that point, that is a decision for you to make, obviously. Or you don't even have to use Bitget. You can use any exchange really that you want. You can use the same formula. It doesn't matter what exchange that you do use. And yeah, I think that's a good place to end this one. Hope this serves you well. And with that said, take care, and I'll see you in the next one.